Alright, so guys, welcome back again. So I'm actually going to be showing you what um I'm actually going to be doing a real quick, you know, chart pattern that can actually um fund your account for you, comfortably. So this is actually one of those conferences that you need to look out for. When you see this in the chart, then you should be rest assured to shoot your shot, because it's actually going to be you know um yielding a whole lot and tons of profit for you. All right, pretty much. This is what it looks like, and then I'm going to be calling this pretty much the where I'm going to be calling this the adjacent wedge. All right, so I'm calling this the adjacent wedge. Now, the reason why I'm calling this the adjacent wedge is because there was if you watch clearly on this, you'll be able to see that there is you'll be able to see that there is a wedge right here. As you can see now, this is actually uh, I could say, because we're actually doing, I could say, upward wedge. All right, so adjacent upward wedge. So pretty much this is it. Now, remember the concept about wedge is this. Don't get it twisted. Very simple. You have something like this. You have a chart price action like this. You have this, and you have it goes down. Now, this is actually a wedge. The whole of this place, this compound is called, you know, a wedge. The whole of this place is your wedge. Are we together now? So when you see, that's why you have to be very sensitive when it comes to price action, and then the chart in itself. This is actually gold. I'm actually doing this for gold. I'm actually going to showing you how this is going to work pretty much in gold. So this is when you see something like this is upward wedge. When you also see something like this, as reverse becomes the case. Now this becomes a downward wedge. Are we together now? This becomes a downward wedge. Now the reason why it's a downward wedge is because uh sorry, let me get this, let me make this much more clearer for us. I think let me get a better picture for us on this. I think this is how we explain it clearly. Just hold on while I do this real quick. Alright, so alright, so for a downward wedge, this is what we look out for. We're having a bullish trend, and all of a sudden you have this full drop. So this becomes your downward wedge. Are we together now? So this becomes downward wedge. Now, it's the downward wedge because when price action gets to this particular level, there's a drop. It does one or two retracements. Now, a couple of times this retracement might be as a result of maybe a hair rally gap somewhere or an imbalance somewhere that it is trying to correct. And once it does that, boom, it keeps moving. Now it keeps moving up. So this is a downward wedge for up, um, you know, a bullish movement. Now for the downward, for upward wedge is for the upward wedge mostly occurs in bearish trend. As you can see right there, so pretty much this is what it looks like. So on these, like I said, I'm taking us right to this point. So this particular video is all about adjacent upward wedge. So that's what I'm actually doing right here. So I'm actually going to be taking us to the chart, and then we're going to be continuing from there. Now remember, when you have an execution like this and there's a single pull out like this, now most of the case, this price action tends to test this level. Let me do this real quick. Now, when you're having an order block, for example, this is a pilot. You understand? This is a pilot. We're having this is a pilot, this is a pilot, this is a pilot. Are we together now? Now it has tested it 3 times. Now, this very one, when it gets to this point, price action breaks. Now, when price action breaks this particular level, what it wants to do is to do a retracement to this particular level. And when it does the retracement to this particular level, it comes down. This particular block now is not going to be um this particular block here, this particular other block here is not going to be tagged other block, but it's going to be tagged a breaker block. Are we together now? Now this is simply how breaker blocks are formed. Are we together now? So this particular block is going to be tagged a breaker block. The reason why it's a breaker block is because price action break beyond that level and then retested and then pulled down. But if the case becomes this that you're having right here, this this particular what you're having right here, that has to do with this whole stuff you're seeing here. If this becomes the other case, whereby instead of price action retesting this level, retest getting back to the other block and pushing down, therefore forming a breaker block, if it refuses to do this and then forms this by giving you a wedge, giving you an upward wedge here, which is not most of the case as adjacent to the hesitation that is being formed right here, then you should be preparing for a downward, pull, which becomes bearish at this moment. Are we together now? So once you have this, in most of the cases, most of the time, the price action might necessarily not define um, this particular breakout very clearly. It might just do something short like this. So you have to also be watchful once it does this and it starts forming wedge. The next thing you need to do is to get yourself set, because for most of the time price will need to test a particular level three, three times and above. And you test it 3 times, then it can now be able to pull through and break through that level down. So you have to be watchful when price gets to that level and breaks down. Then you have to now go ahead and set your short position in this case. Now this will now become a short position. This is what you'll be targeting right here. I know this chart is looking a little bit disorganized, but don't worry. I'm going to be taking you to the real market. So you do this and you aim for a minimum of twice the risk, which is 2 times the risk or whatever the risk to reward ratio, depending on how whatever the pool is going to look like. Are we together? So let's dive into the market properly and see what that is going to be like. So pretty much, let me take away all of this. Away all of this because we are treating adjacent wedge. So let me do away with all of this real quick. Let me just do away with all of this real quick. All right, now let's go back. Let me now bring back the chart. Now this is a clean chart, as you can see right here. Exactly what I explained. Now if you watch, many things has been happening lately on gold. This is good. So let's put out what really happened. Let's put out right here. Alright. Now you are having a pile up here. This is a pile up. Let me indicate it so you see it clearly. So we are having this pile up right here. We are having this pile up right here. Alright, so let me do this. For example, this is a pilot. Hmm? This is actually an execution form. So we're having it right here. So for me, why let me take it to a lower time frame so you could see, you get a clearer picture of what I think this is going to do justice to it. Alright, so alright, I think this will also do it will do a beautiful justice to it. Alright, now as you can see, let's get to this level. Now this is off. Because when you see stuff like this, you try as much as you can to also get through to other time frame. That's the best way you analyze your market to get you analyze the chart to really get the perfect chart you know entry. Alright, now we've been able to get this pile of this execution right here. And now you see there was a breakout here. Now what price action did here was pretty much simple. It actually did breakout this section. Then it went back to retest it. After retesting, it was supposed to come down. But now price didn't push down, you know, at this level, it really become bearish. But what it had to do was to, come back and it started forming adjacent wedge. Are you seeing adjacent upward wedge? Are you seeing this? So immediately it got to this point. This was where it came, it was a drawdown. So if you had seen this clearly coming and you are able to, set you're able to go on a short position as normal, as usual, and you're able to get this to say, okay, yes, the stop loss a little bit above there, and you're able to see, okay, uh, you're able to get through the market at the point where there was this bearish for value that was imagine what you would have, imagine what it is. This is actually, you know, this is actually one is to four. Because you can see this is actually 4 times your risk. And this is actually a perfect trade on gold. 5 minutes, a perfect trade on gold if you're able to catch this. Are we together now? So pretty much, these are some conferences you need to look out for. Remember, there are other things you need to also look out for. You won't just use this chart pattern to be able to analyze and judge. No, you should also look out for imbalances within the chart and how price reacts to those particular level of imbalances and then what it does after what. Remember, we only react to what price action has been able to play out. Are we together now? You don't predictably react to what has been played out. So since it has been able to play out this and do this for us, the next thing we do is to just chill and relax, waiting for when price action gets to this imbalance. And immediately it got there and did that because it became a big pull and this became one to support. So it's actually a big one. It's actually a big one for those who actually got into the trade because it's a big one anyways. So some open it's a good one. So pretty much this is where I'm actually drawing the cutting on this video and then if it has actually been impactful to you, do it to give the subscribe button, turn on the notification bell so you will be notified whenever I will drop new video for you.